pro-capital cities. Now, this chart clearly shows 30 years of massive outperformance in favor of capital cities. With this long-term proof, why would anyone risk the short-term potential sugar hit that regional markets offer when it comes to capital growth, when clearly these capital cities outperform?
This particular chart does the classic mistake many people make of regional investing, is that they bucket all of regional markets in a certain way. So in the chart, you would have noticed regional New South Wales versus Sydney, regional Victoria versus Melbourne. And the problem is that when data gets so small, or when there isn't as many large city examples as, say, Adelaide has as a city, it's easier for the stats guys and gals to just put it all together and go regional SA versus Adelaide. Where if you broke it down to, say, Barossa Valley, Victor Harbour, Mount Gambier, and some key centres, and excluded data of the areas where they have under 5,000, under 10,000 population, extreme volatility. Yep. You get pretty funky data there. And so the thing is, my best review of this is if you break it down to LGA or SA3 level, you just don't get a huge disparity. You can cut the data into 15, 20, 25, 30, 35 years, and across the top list, you'll have some capital centres and you'll have some regional centres. And so from that perspective, I don't feel the disparity is as what's portrayed. It's the fact that data grouping creates an issue. And even when you do create an issue and you compare it to Sydney, unfortunately, when you break down Sydney's 5 million, they still have a similar city economy. But if you look at New South Wales, Coffs Harbour's economy is very, very different if you go all the way to the other side to Albury. And so from that perspective, you can't group regional New South Wales the same way you can Greater Sydney. And so from that perspective, I don't agree with that data set. I like to look at it down to smaller levels, because imagine if you had a budget that was not suitable for a capital city at that time, and you're either deciding to go into a unit that maybe doesn't work, or you're going into the furthest, the cheapest house and land package you can possibly find, or you're going to just wait and think you need more money in a bigger deposit. Or whilst that time, someone out there considering the whole country, the best markets at the best time, is growing a portfolio and gaining hundreds of thousands of dollars in equity. So that's where I think those stats in that chart just don't make sense.